On Wednesday, March 25th, the stock market rallied. Oil prices crashed 10%. Headlines everywhere said the same thing. Peace is coming. The war with Iran might be ending. Investors exhaled. Markets opened higher. The Dow jumped 305 points. The Nasdaq climbed 0.7%. The S&P 500 was green for the first time in weeks. And then, 24 hours later, Iran's foreign minister went on state television. He looked directly into the camera and he said 5 words that erased all of it. No negotiations have happened. None. Oil spiked back to $107 per barrel. Asian markets opened in the red. The brief rally was gone, and millions of ordinary investors were left asking the same question: what just happened to my money? In this video, I am going to show you exactly what happened. This is not just a story about diplomacy failing. This is a story about the most sophisticated market manipulation in modern financial history. And the terrifying part, it is still happening right now. Here are 3 numbers that explain the last 48 hours. 10%. That is how much oil prices fell on Wednesday, March 25, the moment peace plan headlines hit. In a single trading session, $580 million. That is how much in oil futures contracts were sold in a single 60-second window. On Monday, March 23rd, exactly 15 minutes before Trump posted on Truth Social that the U.S. was in productive conversations with Iran, and 6,200. That is how many contracts changed hands. In that single 1-minute window between 6:49 and 6:50 a.m. on the Chicago Mercantile Exchange, according to the Financial Times, the average in that same window on the previous 5 days was 700 contracts. Someone knew. 16 minutes before the rest of the world, Nobel Prize-winning economist Paul Krugman called it publicly. He called it treason, and the evidence is now impossible to ignore. Let me give you the 48-hour timeline, because the speed of what happened is the whole story. Monday, March 23rd, 6:49 a.m., New York time, $580 million in oil futures flood the market. No news to explain it, no public announcement, nothing. 6:50 a.m., the trading stops. 7:04 a.m., Trump posts on Truth Social. The United States has been in productive conversations with Iran. The war may be ending very soon. Oil prices collapse, stocks surge. The people who sold oil futures at 6:49 made enormous profits in under 20 minutes. Tuesday, March 25th, the New York Times reports the United States sent Iran a comprehensive 15-point peace plan delivered through Pakistani intermediaries. S&P 500 futures rise more than 1% in pre-market. Oil falls another 4%. Trump says negotiations are going very well. The peace trade is on. Wednesday, March 25th. Morning. Iranian Foreign Minister Abbas Araghchi speaks on state television. No negotiations have happened with the enemy until now. We do not plan on any negotiations. Iran's parliament speaker Mohammad Bagher Ghalibaf goes further. He calls the peace plan reports, fake news, used to manipulate the financial and oil markets. Those are his exact words. Thursday, March 26th. Brent crude surges back toward $107 per barrel. WTI climbs toward $94. Asian markets open in the red. Japan's Nikkei, South Korea's Kospi, Hong Kong's Hang Seng, all post losses. The brief peace rally is completely erased. 48 hours. Markets up, markets down, oil up. And ordinary investors, those 401k holders, those pension funds, those retail traders, are the ones left holding the loss. Now let me show you the game theory behind this, because what just happened was not accidental. It was not confusion. It was not a miscommunication between two governments. It was a trap. And understanding who said it tells you something terrifying about where this war is going. Economists and political scientists have a name for what happened. They call it the information asymmetry game. Here is how it works. Here is how, in any negotiation between two parties, the side that controls what information reaches the public controls the market, not the battlefield, the market. Because modern war is fought on 2 fronts simultaneously. Front 1, the military front, missiles, ships, airstrikes. Front 2, the financial front, oil futures, stock indices, bond markets. And right now, both sides are playing the financial front with weapons that most people do not even recognize as weapons. Weapon 1, the peace rumor. The moment any credible source suggests negotiations are happening, oil falls, stocks rise, gas prices at the pump ease slightly. The political pressure on Washington decreases. Trump wins domestically. His approval numbers stabilize. Weapon 2, the denial. The moment Iran denies any talks, oil spikes. Markets fall. The economic pressure on the United States increases. Iran extracts maximum pain without firing a single additional missile. This is not accident, not. UBS Global Wealth Management chief economist Paul Krugman said it directly. He said markets desperately want to believe in the positive. They focus on the apparent peace plan more than on Iranian dismissals or on the fact that almost no oil is actually flowing through Hormuz. Markets are not trading reality. They are trading hope, and both sides know it, and both sides are exploiting it. The sequence moves like this. Step 1, Washington needs oil prices lower. Every $10 rise in oil adds roughly 0.35% to U.S. consumer inflation, according to Morgan Stanley research. Trump's approval numbers are directly correlated to gas prices. When gas goes up, his numbers go down. So the White House leaks a peace plan, or suggests talks are happening, or posts on Truth Social that things are going very well. Oil falls. Markets rally. The political pressure temporarily eases. Step 2. Iran needs oil prices higher. Higher oil prices fund the Iranian war economy. Higher prices punish the U.S. economy, the consumers, the mortgage holders, the pension funds. Higher prices keep economic pressure on Washington. So Iran denies every peace signal, every single one, publicly, loudly, on state television, because every denial sends oil back up. Step 3. Traders with inside knowledge position themselves before either move. Before the peace signal, they short oil. Before the denial, they go long oil. In one documented case, the 200 contracts were sold in 60 seconds, 16 minutes before Trump's announcement. On Polymarket, 8 new accounts were created around March 24 and collectively bet nearly $70,000 on a ceasefire before March 31, positioning to make $820,000 if that deal went through. In February, 6 newly created accounts made approximately $1 million by correctly betting the U.S. would strike Iran before February 28th. They bought cheap, before the news broke. Step 4, ordinary investors absorb the losses. The retail trader who bought stocks on the peace rally woke up Thursday holding a loss. The pension fund that reduced its oil hedge on Wednesday paid more for oil on Thursday. The small business owner who locked in fuel contracts during the dip may have locked in the wrong price. This is the architecture of the trap. The insiders profit, the public pays. Step 5, the market becomes completely untethered from reality. Traders call Trump's verbal interventions on oil prices our job-owning. Chevron CEO Mike Wirth said it plainly at S&P Global's CERAWeek conference in Houston. He said there are very real physical manifestations of the closure of the Strait of Hormuz that are working their way around the world. Paper prices reflect trading in financial markets. Physical prices reflect what oil actually costs to deliver. Brent futures are up 36% since February 27th, but the Dubai price, which tracks physical delivery from Middle East sellers, is up 76%. More than double the paper price. The market is pricing a peace that does not exist, while the physical world prices a war that very much does. Step 6. The manipulation gets investigated by an agency that no longer has the people to investigate it. The Securities and Exchange Commission Enforcement Director, Margaret Ryan, resigned under pressure just last week. Multiple reports say she left after clashes with leadership over how to handle politically sensitive cases, including those linked to Trump's circle. CISA, the lead U.S. cyber defense agency, has lost roughly a third of its staff. The SEC Enforcement Division is weakened at the exact moment the largest insider trading scandal in modern history is unfolding in plain sight. Step 7. The denial comes from both directions. Trump denies any manipulation. His White House spokesman said, any implication that administration officials are engaged in such activity without evidence is baseless and irresponsible reporting. Iran denies any negotiations. Its military command said publicly, people like us can never get along with people like you. Not now, not ever. 2 governments, both denying, both with documented evidence of the opposite circulating in real time. Now, here is the detail that should change how you think about everything. The 15-point peace plan itself. It was real. The United States did send it, confirmed by 2 regional sources and a U.S. official, to NBC News. Confirmed by Al Jazeera, confirmed by the New York Times. It was delivered through Pakistan. Here is what the plan offered: a 1-month ceasefire while negotiations continued, lifting of primary energy sanctions on Iran, civilian nuclear assistance in exchange for total nuclear dismantlement, removal of all enriched uranium stockpiles, formal declaration of Hormuz as a free maritime zone. Here is what Iran called it: unreasonable. A violation of sovereignty, a veiled demand for surrender. Iran's military command spokesman Ebrahim Zolfakhari went on Iranian state TV and said this: has the level of your inner struggle reached the stage of you negotiating with yourself? Iran's parliament speaker called it a fake news used to manipulate financial and oil markets. Let that sink in. Iran's official position is that the peace plan was designed not to create peace, but to move markets. They are essentially saying Washington uses peace rumors as an oil price management tool, and Marko Kolanovic, former head of quantitative strategy at JPMorgan, agrees with that framing. He urged investors publicly to ignore official statements and focus on the physical reality, whether oil is actually flowing through the Strait of Hormuz, because the content of official pronouncements has been corrupted by manipulation. His conclusion: these markets are being moved by actors who know in advance what Trump will say and do. Let me give you 3 scenarios. What happens next? Scenario 1, the manipulation continues through April 6th. Trump sends more peace signals. Each signal knocks oil down temporarily. Each Iranian denial sends it back up. Markets swing 1% to 2% in both directions daily. This is the current pattern. The volatility is the product. Every swing creates another opportunity for those with advanced knowledge to profit. For ordinary investors, this means your portfolio could swing 5% to 8% based entirely on what one man posts on Truth Social or what one Iranian official says on state television. This is the base case. The market remains hostage to diplomatic theater. Scenario 2, a real deal emerges from the noise. Talks in Islamabad, brokered by Pakistan's Prime Minister Shehbaz Sharif and Field Marshal Asim Munir, produce a genuine framework. Iran accepts a modified version of the 15-point plan. The strait partially reopens. Oil falls sharply towards $75 to $80. Markets rally hard. The peace dividend is real this time. According to LPL financial historical data, geopolitical shocks produce average S&P drawdowns of 4.6%, with recovery in under 6 weeks once conflict resolution is confirmed. The challenge is that Iran's public position and its private negotiating position appear to be deliberately separated. The denials may be a negotiating tactic, or they may be genuine. The market cannot tell the difference, and neither can you. Scenario 3. The manipulation itself becomes the crisis. Congressional Democrats are already laying groundwork for investigations into whether insiders are trading on Trump's market-moving decisions. Representative Dave Taylor of Ohio sold stock among 2 oil companies after the war began on February 28th, Polymarket and Kalshi. The prediction markets, where billions of war bets are being placed, have announced new guidance to guard against manipulation. But enforcement is unclear. If a formal investigation concludes that White House insiders or family members traded on classified information, the political and legal fallout would dwarf any previous financial scandal. Trump's sons, Eric and Donald Jr., have invested in drone companies competing for Pentagon contracts. Jared Kushner is seeking to raise billions for his private equity fund from Persian Gulf governments entangled in this war. Paul Krugman said on NPR this week that adversaries of the United States are tracking activities in financial markets. If they see large transactions suddenly happening, they will use that to infer that somebody with insider knowledge is acting. He called it like foreign espionage. Financial market activity revealing national security decisions to anyone watching carefully enough. So here is where we land. You are not watching a peace process. You are watching a market manipulation system with 2 willing participants. Washington uses peace signals to temporarily suppress oil prices and manage domestic political pressure. Iran uses denials to spike oil back up and maintain maximum economic pain on the United States. Both sides have strong incentives to continue this cycle, right up until one of them cannot. And in the middle of that cycle, somebody with advanced knowledge has already made hundreds of millions of dollars while your 401k swings 5% in a week, while your gas prices bounce up and down by 15 cents, while pension funds hedge and rehedge in real time based on the word of a president and the denial of a foreign government. Traders have a word for what Trump is doing to oil prices. They call it jawboning. It is working in the sense that paper oil prices are staying below physical delivery prices. But the physical world does not care about jawboning. Physical oil is still not flowing through the strait. The Dubai price, what it actually costs to receive a barrel of Middle East oil, is up 76% since February 27th. The paper price is up 36%. That 40-point gap is the size of the lie. And at some point, the physical world catches up to the paper world. BCA Research's Marco Papic estimated this week that by mid-April, the world will lose not 4.5 to 5 million barrels per day, but 9 to 10 million barrels per day, because the strategic reserves will run out, because the Russian oil exemptions will run out, because Middle Eastern producers cannot store what they cannot ship, and wells that are shut in do not simply restart the moment diplomacy succeeds. There is no version of this where the peace plan resolves the supply problem in days. This is an educational analysis based on publicly available information. Some developments are still evolving and not independently verified. This is not financial or political advice. Watch what is being said, then watch what oil is actually doing. Watch the paper price, then watch the Dubai physical price. Because the gap between those two numbers is the gap between the story being told and the reality being lived. The next announcement from Washington will move your market. The next denial from Tehran will move it back. The question is, who is positioned before each move, and whether that question ever gets answered? Be here for that.